G'day folks, it's Jim here from Orchard Forex. It is Wednesday the 17th of June. It's been another positive day for the stock markets. The US indices closed up around 2%. This came on the back of Jerome Powell's testimony to Congress, and also a Bloomberg report that suggested that the Trump administration are going to inject another trillion US dollars into the economy by means of an infrastructure package. So we'll have to wait and see on that one. But as we're going to have a look at the markets, some trading opportunities. And as you can see here, this is an hourly S&P chart. So the S&P had a bit of a wild ride, but it did reach our resistance level at 31.65. This being the neckline of that head and shoulders that we've spoken about before. And it's come off a bit since then. And in fact, the hourlies are pointing a bit lower now. So I do think there's possibly a bit of downside momentum, although the 4-hour charts remain positive, so it could end up just being a choppy session. But with the dailies also pointing a little bit lower, I prefer to, just for the next 24 hours, trade this from the short side with a stop loss above this 31.65 level here. So looking to sell rallies possibly to around the 200-hour moving average. That's at sort of 31.25. The 100-hour is at 30.80. Possibly we just chop around there during the Asian session and wait for direction from the States. There's not an awful lot out tonight. Powell will be speaking again in the second day of his testimony. And aside from that, it's just the US housing data, building permits and housing starts for May. Yeah, so I prefer to just trade that from the short side for the day. Elsewhere, as far as the US dollar is concerned, the US dollar index actually headed about 0.5% higher on Tuesday, and it's given us some quite interesting trading opportunities here. I think the daily charts, this is a Euro daily chart, are pointing lower, and we were unable to take out that 113.5 resistance level yesterday. Now, interestingly, I think we might be building a bit of a head and shoulders here. We've yet to break below. We need to break below 112. In order to confirm that. But if we do, this is 114.20, this is down around 112.20, so it'd be 200 basis points would be the measured target, down around 110 area, so it's worth keeping an eye out for. The hourly charts look a bit heavy. The 4 hours is showing us nothing at the moment, but I kind of like that as a potential trade. But as I say, we really need to break down below this 112 area. But I do think we're heading in that direction. The hourlies look heavy, so we're possibly going to trade around here during Asia, and then maybe we see a bit of a sell-off in Europe, but worth watching anyway. Dollar yen's doing nothing. Sterling's quite interesting. Not sure if we're forming a bit of a wedge here. This is a 4-hourly sterling chart. The parameters being where sort of 128.25 and sort of 124. So we're quite away from it either side at the moment. We're probably sitting in the middle. But I think if we were going to do anything, I think we'd possibly break onto the downside. Once again, this is probably more of a longer term trade. I'd be looking to sell rallies up towards this high, which is at sort of 126.80. So that's 130 points away, and it's probably going to remain choppy in the meantime, but I suspect the momentum is a little bit lower. As far as the Aussie is concerned, that failed as well. It did get up to our resistance level at 69.80, where it tested the top of the weekly cloud. I'm just going to have a look at that weekly cloud chart. Okay, here we are. So we did test the top of the weekly cloud at 69.80, failed there, came back down, and now we're sitting near the base of the cloud. There's not much in the cloud at the moment, really. It's pretty thin. But we're back below the 100-week moving average, which has acted as a bit of a pivot recently. But going back to the Aussie itself, I kind of think we might be heading for another test of this support, which is at sort of 67.75, and if we go through that, then we might see an acceleration down towards the downside. Once again, it remains some way off at the moment. This is a 4-hour chart, and the momentum indicators are not really suggesting an awful lot of movement, although the hourlies do appear to be pointing a little bit lower. And we're now below the 200, 100 and sitting right on the 55-hour moving average. So my view there is possibly to look to sell rallies. I'd probably have a stop loss above the 200-hour moving average here. What's that at 69.30 today? Certainly, if it did make a move higher above this high here, I'd be getting out now, I think, because then I think we'd probably have a test at 70 and plus. But right now, looking to trade from the short side and hoping for a test of this support down here at sort of 67.75. Kiwi's pretty much in the same boat. It failed at its it failed up here at just about at 65. We're now at 64.40. Support down here at 63.80, and if that goes, I think we're probably going to make a measured target of somewhere down around here, so possibly down to around this sort of level here. That's some way off at this stage, but it's worth keeping an eye out for. It's a longer term trade, as I say, and the 4-hour charts are pretty neutral at the moment, but the dailies are pointing lower, so I kind of like to sell rallies. That's probably about it for the day. The metals are pretty choppy and sideways. The only other thing I do like, though, as I've said before, is oil. We'll just have a quick look at oil. Okay, here's an oil chart now. West Texas Intermediate put on just over 2% today, actually, but it came off its highs. And I guess in the bigger picture, you could probably say it's chopping around, not doing an awful lot. And indeed, the hourlies do look a little bit heavy, but that's probably just a correction for as they've rejected those highs just around just below 40. But on the longer term charts, the 4 hourlies may be building some minor positive momentum. I don't think we're going anywhere fast at this stage. The dailies look a little bit less certain. They're possibly pointing slightly low, but the weeklies, and I think there's a longer term trade. This is probably not a bad trade. As I said before, it does look to me to be like a reverse head and shoulder, and as long as we stay above sort of $33, I kind of like it for a measured target of somewhere up around $50 to $55. Major resistance in this 40 to 43 area, filling the gap. We've got the neckline from the very large head and shoulders I've shown you before on the weeklies. This head and shoulders here that allowed us to go to zero and bounce back again. So there's major resistance there, but I think eventually we might get through it, and I'm kind of looking to head high. The only thing I can think is going to help oil in that direction right now with the pandemic on, it's a little confusing as to why oil should look this good. But if we do come through the pandemic successfully, and the Fed continue to underpin the economy, and retail sales, retail sales in the US today were astounding. So if we keep getting numbers like that, then confidence will grow in the global economy and demand for oil will take off. So that just keep an eye on that. It's not necessarily a trade for today, but longer term, I think it looks all right. So that's about it. The only other thing I'll go and have a look at is the trend table that I put on the website. Okay, I publish this every day. It's all a bit confused at the moment. There's nothing particularly that stands out, although Euro Yen looks as though it might be trending a little bit lower. 3 successive red boxes. We'll go and have a look at Euro Yen in a second. But apart from that, the crosses look fairly neutral. Gold and silver are doing nothing. The stock markets look a little bit confused. As I said, I prefer to trade them from the short side for now. And as far as the US dollar is concerned, that's looking fairly choppy as well. We're just going to have a quick look at Euro Yen. Okay, here we have a Euro Yen chart. It seems to have broken the back of this recent uptrend that we've had through May. We're now into some choppy consolidation, really. But the 4 hourly charts may be hinting that we're heading a little bit lower. The way I would trade that, we've got this minor support here coming in sort of 120.5. So if we were to go below 120.5, I think we might see a bit of an acceleration to the downside. The 4 hourlies are pointing lower. Targets, I guess, would be, well, this 38.2 is FIBO level is supporting at the moment, but if we were to go below there, 119.40 and potentially out to sort of 118 and change. So as I say, the 4 hourlies might be pointing a little bit lower, and the dailies also look pretty heavy. So I kind of like that as a trade. Possibly enter here, or for more conservative traders, wait for the 100-hour moving average. What's that? 121.25. I'd certainly be out above the 200-hour moving average. So that's at 122.10 at the moment. So that'd be my trade if I was going to look for it. And on the downside, well, as I say, we're probably going to find support down around this area initially. That's a 119.5, but it's a reasonable trade. And further out, I think there was a FIBO level. That's a 118 and change as well on the 4-hour charts. So down there, yeah, 118.25. So that's worth looking at. We'll leave it there for today. Have a good day's trading, and talk to you tomorrow. Cheers.